Okay, so let's begin. So just a quick introduction of myself. I'm Li Sing. I provide FX advisory to institutional clients. If you have any questions on the recordings, right, please feel free to reach out to me on LinkedIn. If you're here with us live right now, and if you have any questions, do put your questions under the questions tab. Just a quick disclaimer. The information presented here is not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today, right? So as always, for our analysis sessions, we will hop onto our economic calendar. So for this, we will take a look at Vantage economic calendar to see if there are any upcoming key events. And following that, we will take a look at our setups. So for setups, today's focus will be on Aussie dollar mainly, right? We will also be taking a look at dollar index as well as euro dollar. So euro dollar was based on our previous session, right? So if you recall, in our previous session, we covered on euro dollar and how we are using supply and demand areas on that zone. So we will do a review of how the analysis turned out. And throughout the session, right, we open the floor to Q&A. So if you have any questions with regards to the charts, so it doesn't have to be Aussie dollar, right? If you have any questions with regards to specific indices or even the minor currencies, please feel free to put them under the questions tab. Okay, so with that, let's take a look at our economic calendar, right? So for economic calendar, let me just bring up the chart, right? So the two main ones that I use for economic calendar would be mainly Vantage Markets, right? You can just go to vantagemarkets.com. So that's one, right? And the other one would be Forex Factory. So under Vantage Markets, just go to Education and Tools. Let me just bring this up. Right, just go to Education and Tools, Educational Webinars. Sorry, not educational webinars. So educational webinars is the place where you can sign up for the different sessions, right? So throughout, we have different speakers covering different topics. So if there's a specific topic that you're keen on, right, you can just click on it and sign up for them. So those are the educational sessions, right? You can go to Economic Calendar under the Education and Tools tab. Click on Economic Calendar, and over here you can see this area. Right, so this. Okay, so currently this is what we have. You can see this zone, right? So we have the different impact, right? So the ones with higher impact are the ones in red, the ones with medium impact are the ones in amber, and the ones with low impact are the ones in gray. So the key ones that I look at, right? So if you're focused mainly on G7 trading, right? So then you can just take a look at the G7. So the dollar, Aussie, Kiwi, CAD, Euro, Pound, as well as Franc and Yen. So in this case, right, the key ones to watch would be your CPI data, right? Because CPI data, it's a measure or reflection of inflation, and that will in turn affect the central bank's interest rate decision, right? So that's one. The other one to watch would be interest rate decisions data, as well as jobs, right? So jobs, GDP data. So those are the key ones that we have. Okay, so these are the upcoming key ones, right? So you can see that not so much on the G10, at least not for today, right? It's pretty quiet. The main ones that we have tonight would probably be the dollar, right? So impact the dollar. So on the economic calendar, right? So with that, let's take a look at our charts. So let me just bring up the charts. Okay, so this is the picture on Aussie dollar. Maybe before I touch on Aussie dollar, let's just do a quick recap of what we have covered on Euro dollar in the previous session. So you can actually take a look at the recordings that were done previously, right? So on Euro dollar again, right, we start from the higher time frame analysis, looking at the picture on the monthly and weekly, essentially trying to identify if there are any support resistance levels that prices are currently testing. So on Euro dollar on the monthly time frame, right? So notice that when we are on the monthly picture, if this is the monthly picture, what this shows us is basically each candle itself represent price movement within that month, right? So each candle itself, it captures 4 data, the OHLC data, which just means the open, the high, the low, and the close. So each candle, it's reflective of this OHLC data. So essentially when price, so in this area, right, if you see that this is a bullish candle, it just means that for the month, right, price actually closed higher than when it started at the start of the month. Okay, so the point of going on higher time frames, if you're on the monthly and weekly, is that they're a lot less choppy and less noisy as compared to your lower time frame. So compare this to, let's say, 5 minutes data. So if you're on the monthly picture, right, identifying the support resistance levels, right, you can see that even when price comes into these zones, even if it doesn't respect and push through with this zone, right, it doesn't respect this area, we will see reaction of the zones and hesitation within this area. So this is the picture on the monthly. But if you were to take a look at the 5 minutes, for example, you can see that this support resistance levels don't hold as well, right? So if you take a look at the 5 minutes, 5-minute support resistance levels, you can see that this zone, for example, right? So if we were to identify just based on this low, the support level here, you can see that just price just wick right through. Of course, a lot of it is also based on order flow, right? So trying to identify the higher time frames direction, which if prices are sitting on a key level and what does it translate to on the lower time frames. So this is the picture for on the monthly, right? Back when we went through on Wednesday. And when you move down to the weekly time frame and even the daily time frame, you can see that what we have here. Let me just bring it back, right? So what we have over here is that price coming into this zone. So previously we mentioned on looking at the interaction between these candles, right? So if you focus on this portion of the chart, right, I covered on the wicks, right? So trying to identify areas where price held within the previous wick, because if you're to move down onto the lower time frame, this range that we're seeing on the daily, essentially on the 4 hours is a break-in structure. Right, so if I were to move down to the 4 hours, you can see that this is essentially equal highs before price broke above it. So if you go back to the higher time frame, the same zone that we have over here, the candle that basically held within the wick of the zone before price broke above, right, that would be our demand. So we saw how demand followed through, right? So that's the idea. So you can see that price came into this zone and this candle held. This is the candle that held within the high before price broke above it, retested the zone as a demand, and then once again over here. So back on Wednesday, right, we called for a short on euro dollar with this as the target on the demand, right? And the resistance area that we're seeing here, it's basically based on this area where price failed, right? You can see that price tested this demand. So if you follow through with the demand zones, you can see that at this area itself, right, we have once again equal highs that are being formed, or what we consider our triple tops, right? Equal highs being formed, price broke through with structure. So we know that on the daily time frame, when there's a break in structure, right, it's more bearish. And following through with this, we have all these resistance zones that are being formed, right, on the way down. Okay, so that's the picture on the daily time frame. If you go down to the 4 hours time frame, right, same idea. Before that, right, on the daily, you can see that there is again this wick. So this wick represents support, right, or demand on the lower time frame. If you go to the 4 hours, you can see it as well, right? So a sharp rejection of this area before price broke below this zone. So if you go back to the daily time frame, you can see that again, right? We using the same idea. This is the demand zone. So what's the last demand candle that caused the failure of this zone? It's the supply area over here. Okay, so if you want to narrow the range, right, then of course we need to move further down, right? This can be based on the lower time frame, the 4 hours. In this case, you can see that the 4 hours candle price came in and it actually wicked slightly above it before it continues to the downside. So likewise, right now we are coming into this higher time frame demand. If you're on the daily, you can see that this is your daily zone, right? The daily demand. For me, this demand area, it's basically based on taking the last candle. You can see this candle over here, the reaction of this candle, how price came into this area before it pushed higher. And this candle itself was also the previous candle that tapped into the demand zone that we're seeing here. Okay, so this is the area. If you go into the 4 hours time frame, you can see that this is currently where we are, right? And if you notice the most recent price movement, so we have that break in structure that we saw on the daily, it's also reflective on the 4 hours, right? So price came in, it broke below the previous low, and it continues to form lower lows and lower highs coming into this area. So right now, right, if we are looking at it just based on supply demand area, this is the last move, and you can see that there's bearish order flow with lower lows and lower highs being formed. This is the last structure, right? So which means that as long as the downtrend continues, any pullback, right, as long as price holds below this high, price could continue to the downside. Okay, so this is the picture on euro dollar. So with that, let's take a look at Aussie dollar. Right, so let's focus on Aussie dollar's technical analysis for today. So on Aussie dollar, right, you can see that this area itself. So let me just remove that. So this is on a 4 hours time frame, right? So again, we want to move to the higher time frame first, right? So that can be on our weekly or our monthly time frame. So you can see that the picture on the monthly, right, this area here. So if we are on the monthly time frame, I want to focus on just the recent price development, right? There's no point in going all the way back here, because if you to move back, you can see that this is anywhere as far as 2015. So those levels might not be as relevant, right? So I want to focus on the most recent years. So just looking at this part of the chart alone, right? If you want to have more details on the price movements, you can go to the weekly time frame as well, so that we can see a clearer picture of how it's like. So in this case, let me just remove this. Right. So in this example, you can see that on the monthly time frame, we have this area here. So we have a support and resistance area, essentially an area where price reacted off this zone as a resistance, broke above it, tested as a support, and currently it's holding above this region as a support and failed. We tested this area as a resistance. So this is a support and resistance level, right? So apart from just doing that, we can also use our retracement levels to try and find if there's any level that lines up with this zone. So the idea in mind is just to understand that if price comes or reacted away from this resistance area, right, then where is the potential target that we can look at on the monthly time frame? So that's the reason why we're highlighting these zones. So once price comes into this zone, right, if I were to use the Fibonacci retracement of this, taking the highs and lows, you can see that the 50% retracement sits at this high, right? So 50% retracement is at this area. You also have a descending trend line that's being formed, right? So prices coming in to form lower lows and lower highs. You see that this descending trend line is being respected over here multiple times, right? So this is the picture on the monthly time frame. In terms of where we are for the support level on the monthly, you can see that right now where we are, we have a potential area here. So we're seeing a squeeze, right? And this region itself, this is the last low, right? So if you look at it just based in close or in line chart, you can see that this was the last low that we saw that rejection. So price came down strongly to this zone before we saw that move up. So this support area, right, we would still have to keep this area in mind, or this zone in mind rather, right? Because this is an area where we saw how price rejected and bounced off this level. So this is the picture on the monthly, right? So we have a 50% retracement here. If you take a retracement of this move, the move up before that pullback, the move from low to high, again, right, when we do that, let's see what that gives us. So when you take a retracement level from low to high, you open up this key levels. Again, you can see that the 78.6 retracement sits on this zone. So this is the picture on the monthly. When we move down to the weekly time frame, what we have over here is that you can see that there isn't much area, right? We have this strong move down previously. And following that, right, you can see that the wicks of the candles, right? Price came into the wicks of this area. And we have some kind of bearish pressure forming before price continues to the downside, right? That's the picture on the weekly. I would say that it's not too different from where we are on the monthly, right? If you go down to the daily time frame, so on the daily time frame, currently this is the range that we're see that price came in, it broke the previous structure, right? And again, price came in, it forms equal low here. So if we take a look at this region, right, this area here, we just remove these drawings, right? So let's see how we can interpret this. So price came into a resistance region, right? And we can see that there is this move up over here once before price pushed slightly higher, swept above this high. And following that, we can see price coming back down into this area, over here, right? And once there is this sweep, price then retested the support and resistance area again, right? So you can see that once, so let me just remove the drawing. So price came in from the new high, and then it swept slightly above before we see the strong bearish pressure down. Price then retested this zone again as a support and resistance level, where we saw that huge move down. And once this has been formed, you can see that this is the candle, this is our supply. Right, so I'll just highlight this in a different color. So put this in red, right, in a different color, extend this across. You can see that when price comes into this zone, right, we have a reaction of it once over here. And then right now, what we're seeing over here, it's just equal highs and equal lows being formed, right? Basically within a range. You can see price trading within the range that we're seeing here. Right? And if you take a look at the reaction to the left of the chart, we have once again a resistance and support level over here. So this range that we're seeing, right? So price broke above this range represented by this strong bullish candle. So whenever there is a range that price broke above or below, you can see that the subsequent candle that forms, right, following that breakthrough, usually this would be an indication of whether it's a breakout or not, right? So if it's a false breakout, usually you don't see the wicks, you don't see such a strong body, right? So the length of the wicks, right, when you compare them as a portion to the whole candle itself, usually the wicks will take up a huge portion of the whole candle. But in this example, you can see that the body of the candles, right, make up most of it. And in fact, we have relatively small wicks, which means that this buying pressure is sustained. And when we see this kind of action, right, one thing to ask ourselves is that this candle, so again, right, the candle that held within this range before we see that breakout, this then becomes a demand candle, right? Because we saw how price broke above the resistance area or above the supply. So when supply fails, it forms demand, vice versa, right? So this is our demand. So which means that if price comes into this zone, right, these are the two zones that we would like to keep a lookout for. So I'll put this in a different color. So you can see that right now it's trading within the range, right? So we could see price push higher out of this range to tap into this area over here before it continues to the downside. Or price could come into this zone first, right? So either or, right? Either or of it, depending on how the market reacts. But when price comes into this zone, right, again, if we're seeing a push into this area, what we want to watch out for is to see if there's any reaction, right, in this area. So if price pushes into this zone, right, you can see that coming into this area, you'll be seeing lower lows and lower highs being formed, right? So that will be in terms of market structure. So if we're seeing a respect of these areas, that's when we'll be seeing that change, right? So if price starts forming lower lows and lower highs coming into this zone, we will first see that change happen on your lower time frame. So what I mean by this is that if price comes into this area here, starts forming lower lows and lower highs, right? If there's a change in structure, that will first take place on your lower time frame. And once that happens, we can take it as the demand area to continue to the upside. Okay, so that's the picture for me on Aussie dollar, right? Currently, we are on the daily time frame. So these are the daily zones that we would like to watch over here. So you can see that we have one there, it's above, and this is based on how price reacted previously, and also another support region that we're seeing here. So this is the picture on the daily. If you move down to the 4 hours time frame. Okay, so on the 4 hours time frame, we can see that it's pretty much trading within a range, right? You have a resistance area that we're seeing over here, and also a support zone over here. Right, so we have a resistance and support area throughout this move, right? So when price comes into this area, right, if you notice the previous highs, right, just looking at a 4 hours area, right, price came in. Of course, this is more of a zone rather than a specific level, right? So as much as possible, we try and highlight a zone here. But what notice this action, right? So we have equal highs that are being formed throughout. And when that finally happens, right, you can see that there's also a break in structure. So price came in and broke below structure, and then it came back above into this resistance area. We saw a first reaction once, and then what happens after that is that price once again pushed up strongly above this area. You see this strong bullish candle, right? So price came in above this high, swept any liquidity line slightly above. So especially when you're in a range, right, you can see that in general, right, there would be orders lying slightly above and below this range. So when there is a range and there are orders lying slightly above and below this range, right, you can see that this sweep itself, or this area, which price pushed strongly into before we see an equally strong rejection of this zone, this area itself would then be our order block. So when price breaks above this area and it starts forming a move that is lower, right, any retest of this zone then becomes a supply region. So if you see this, see that this is the zone, price pushed higher before it broke below, right? And this is the candle that mitigated the previous move, which is this area here. So when that happens, right, this then becomes our supply. Okay, so this is our supply. So once again, we want to highlight this area. I'll put this in different color, right? Maybe instead of a different color, we want to label the time frame so that's easier for us to identify. So this is on the 4 hours. Okay, so this is the picture on the 4 hours. So likewise, right, we're seeing equal lows being formed here, right? So if you notice within this range itself, we're seeing equal lows that are being formed. Price came in, right, it pushed slightly higher. So if price comes into the 4 hours zone, right, again, if price pushed up into the 4 hours zone, we want to ask ourselves, you can go to the lower time frame, either the 15 minutes or 10 minutes. But the idea is that when price pushed into this area, if we're seeing a respect of the 4 hours region, right, we will first see that change in price action happen on your 4 hours, on your lower time frame, right? It can be 15 minutes, 10 minutes. And then when that happens, then it shows that 4 hours resistance area is respected. So assuming that price did push into this 4 hours area, you can see that currently it's just pulling back into the 4 hours zone, it will start forming a lower, higher lows and higher highs. So then the question we want to ask ourselves is that if there is a respect of this zone as a resistance, right, we will first see the change in market structure happen. That's one. And if you go back down to the 4 hours time frame, the other question to ask ourselves is that what would the target be, right? So if you're on a 4 hours picture and we're seeing that pullback, then this essentially forms our new low. So if price starts showing reversal signs over here, we can target the 4 hours, which is this low. So essentially this area here as the support. Okay, so this is the picture for us on Aussie dollar, right? So if price comes into this zone, again, if you want to wait for lower time frame confirmation, you can do that by going down to either your 15 minutes, 10 minutes, right? Basically down to the lower time frames, because you can see that if there is any move up in these areas, right? If we're seeing any pullback into this zone, right? We'll first see, or any reversal for that matter, right? That will first be reflected on your lower time frames. Okay, so that's on Aussie dollar, right? And let's take a look at dollar index as well. So again, from our higher time frame, right? So you can see on dollar index, it's sitting on the support region here, right? So was the previous resistance and support area, we saw a sharp rejection of it twice before price broke above it. So that's the picture on the monthly. If we go down to the weekly time frame, you can see then on the weekly time frame, right? Currently prices are forming equal lows over here. So not much difference, right? We did highlight this area as a support turn resistance level, right? So price came in, tested a few times before it broke and retested this zone. That's the picture on the weekly time frame. If you're on the daily time frame, you can see that previously we're seeing a consolidation of this zone, right? So price coming into this area, you're seeing a descending channel in the form of lower lows and lower highs being formed. Right now, price broke above the descending channel, right? You can see here. And if you go to the 4 hours time frame, it's probably clearer. So if you're on the 4 hours time frame, you can see that there is also a change in structure, right? So previously we have resistance areas. So let me just remove this channel, right, and focus on this portion. So apart from just the descending channel being broken, you can see that when price comes into this monthly support region in blue, you're seeing consolidation, right? So price consolidated, we're seeing this resistance or supply areas that we highlighted previously, the ones in red, right? The supply areas are being respected and it works until it doesn't, right? So when price comes into this zone, you can see that price wick above it. Once supply fails, you can see that demand becomes the new area, right? So price came in and you can see that price tapped into the demand. So demand itself is just taken based on the previous consolidation. So if you take a look at this move itself here, for to zoom in, you can see that price traded sideways before we see the strong bullish candle. Right, so the strong bullish candle, it's a representation of a breakout of the range. So this range then becomes our demand. So when price or when supply fails, which is this area here, you can see that when supply fails, this zone, right? So when supply fails, you can see that demand areas have been respected, and right now we're just seeing price pushed higher. Okay, so this is the demand zone for us, right? So we have, you can again, right, just highlight the demand zones, right? So demand zones are basically areas where price came and tapped into, and we're seeing that break in structure. So this is demand. I'll put this in purple or maybe in yellow, right? So this is the lower time frame demand. So we see price coming into the demand zone, and we're seeing that break in structure. You can see price broke above the last high. And once again, right, when that happens, when price broke above the last high, you can see the same demand area being followed through. Okay, so we're seeing right now this area here, right, that serves as demand. Price that came tap into this zone and broke structure. So this is the last demand zone for us. Okay, so on the monthly time frame, you can see that it's currently sitting on the demand zone, right? And if you're on the daily or weekly, we're seeing that consolidation. And right now, finally, prices are just pushing higher, right? So this is an area of consolidation. And right now, if you go down to the 4 hours time frame, you can see on the 4 hours time frame, right, this demand areas have been followed through, and more importantly, previously, right, supply or resistance areas failed. So once that happens, you can see that price came back into the extreme or the consolidated area, which we saw a breakout previously, right? So price came back into this zone, tap into this area, and right now we're just seeing higher lows and higher highs being formed. Okay, so that's the picture for dollar index, right? The resistance area still stays the same. So this is the last high that we have, but we do have to keep in mind that when we are seeing a break of this area or this last high, which prices are currently testing, right? This could potentially be a formation of your double bottom as well, right? With this resistance area serving as a neckline. So if that's the case, right, and we're seeing that break, then on the higher time frame, right, order flow is more bullish. So just something we have to keep in mind, right? But if you're on currently on the 4 hours, you can see that where prices are with respect to where the next demand area is, right? It's still some move down. Okay, so that's currently what we have in terms of our analysis, right? If you have no other questions, then this is what we have for today, right? If you have any other questions, please feel free to put them under the questions chat. So just leave it there for about 1 to 2 minutes. And for those of you guys who want to sign up for our sessions, right, just go to vantagemarkets.com/webinars, right? If you have any questions with regards to accounts or funding, right, please email us at support@vantagemarkets.com. Okay, so if there are no other questions, right, that's all that we have for today. So thanks everyone, right? Have a great weekend, and we will catch you guys again tomorrow.